Ladies and gentlemen, welcome back to the channel. I hope you are having a great 4th of July, but we start trading again tomorrow. So vacation is short-lived. Let's go ahead and get you guys caught up to speed with everything going on right now, what you need to know heading into. It feels like the start of the trading week, since yesterday was a half day of trading. But nonetheless, we got some data coming out. We have some things to talk about with AMC Stock as well. So let's get into it. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. And if you guys have not done so already, if you're not signed up with Webull, if you've never signed up before, click that link down below in the description of this video to continue to make these videos possible. Deposit $1, get yourself 15 free stocks. Now, so AMC right now, it's a bit of a lull, I want to say. It's kind of slow. You've rebounded from the lows, and that's pretty clear. I mean, you've actually been moving higher recently, and for whatever reason it didn't pull up. You've been moving higher ever since you hit the lows down here recently at about $4 per share. AMC stock is currently trading at $4.43 per share. You've had a decent move higher, but it's all about the court date. That's what we're waiting for. So CITI just put AMC on a 30-day downside watch, or catalyst downside watch. What that means is they expect some downside. Pretty straightforward. Within the next 30 days. CITI is way late to the party. CITI is trying to crash the party after it's already been crashed, and they show up like, you know, bottles in their hands, like there's nothing to do. It's already been crashed. The stock is already literally crashed, right? You've already seen the downside. Seriously, don't be fooled by analysts or other individuals. You've seen the downside. That's not to say you couldn't see further downside. I'm not a financial advisor. I don't know. I literally drink black coffee out of an M&M coffee mug, okay? Don't listen to me, okay? That's number one. But odds are that you've seen the lows. The markets are forward-looking. People, see, I like to specialize in the psychology of markets. That's what I'm good at. And the psychology of the markets is forward-looking. So with that in mind, you've fallen so far. You see this chart, right? It's fallen. Or maybe we should make this bigger. You've seen this chart, right? It's fallen. The psychology right now is you've priced in the bad news. It's already been priced in. We've already reacted to it. And once we get the courts actually making their final decision, you're going to get a bullish reaction. And that is based off of the forward-looking nature of the markets to say, hey, now what does this bearish catalyst do to AMC fundamentally? Everything always reverts back to fundamentally and the state of the company. And then at that point, markets are going to say, wow, the book value on AMC is incredible. They have double the cash as their market cap. That's insane. And we're going to sit here and say, yeah, we've seen this coming like long ago, right? So that is the dynamic we're faced with between now and the court ruling. It's going to be a little bit of time. We're not going to get anything this week, according to Morgan, the judge, essentially. We're not going to get anything this week. So that means that maybe next week we get a ruling and potentially could see the reverse split, all of, the proposals actually happening next week as well. I would say it's like 90 to 95% that we do get this passing, because if we don't, there's going to be a lot of people that lose their jobs. AMC could potentially go bankrupt, things of that nature. So the courts don't want to do that. This is very much like they almost have to let this go through, or thousands of people lose their jobs, right? So odds are this does go through. If it doesn't, then this would be a whole different video. So we're not expecting to hear anything this week. It's next week. Well, AMC has actually seen their cost to borrow rates, their short interest, all of that exploding the last couple of days of trading. And again, I find it interesting that Citigroup slapped a sell rating on AMC. The same analyst which put the stock at sell March 23rd. They're just reiterating the same bullshit at this point. But they actually raised their price target. Isn't that interesting? Jason Bazinet from Citigroup on March 23rd had a sell rating on AMC with $1.60 price target. Well, on Monday, Jason Bazinet from Citigroup reiterated his sell position and now has a $1.65 price target on AMC. So he raised his price target by 5 cents. Big deal, right? Big whoop. Not a big deal. But it kind of shows you that, come on, these guys have no idea what they're doing. And what happened on Monday, AMC stock actually went up about 1%, dropped about 0.23% in after hours. But it was a positive day, right? Can't complain with a green day. Now, if we take a look at some of the option activity, again, it's so bearish, it's positive. You've seen 22 orders on Monday, totaling $5.87 million with a positive order value of 1%. Everyone is negative. We've talked about this before. Makes me a little bit more positive. Now, if we take a look at some of the short interest numbers that we're seeing, for whatever reason, it wouldn't click on that. We're seeing the highest short interest number that we have seen since May 15th. So going back almost 2 months now. And this is legal, official reported short interest at 23.64%. The estimated short interest of free float is sitting at about 23%. Now, that would be about 119 million shares that are currently sold short. But the biggest thing that actually happened yesterday was cost to borrow fees. Cost to borrow average is at 940%. Cost to borrow max is at 1,055%. Cost to borrow minimum at 516%. At the same time, AMC stock is still on the threshold securities list, meaning that we're going to see some buying pressure over the next couple of weeks due to failure to delivers needing to be closed out. This did coincide pretty perfectly with the June 16th expiration, which was that quad witching expiration, and that was a huge one for AMC as well. Now, even Interactive Brokers has a 577% cost to borrow fee. Like, this is not fluke numbers coming in for Ortex. This is the actual numbers from Interactive Brokers. This is putting an immense amount of pressure on the short sellers, and I think that pressure does continue in this upcoming week. And I think the markets, back to psychology of markets, I think the psychology of markets to look into the future, to after this bearish catalyst being such a big positive, AMC raising billions and billions of dollars of capital, I think that's why AMC could actually go higher this week. The markets are already looking past it. They're already looking at the positives. And again, I think that's why AMC was positive on Monday. Now, if we go ahead and take a look at the broad markets as far as the economic calendar, some big data coming out as well. Now, tomorrow on Wednesday, you're going to get a 17-week bond auction. You're expecting yields, or the yield essentially, at 5.22%. That was the last reading that we got. If that goes higher, could be a problem for the markets. Now, FOMC minutes come in at 2 p.m. Eastern Standard Time. This is a transcript of the last Fed meeting. So basically, if you get new information, markets will react to it. Most of the time, it's the same information that we already knew. And last time around, we got the summary of economic projection. So it might be a little bit more important this time around. But odds are it's not going to be important. Markets will react pretty volatilely around 2 p.m. tomorrow. but it's usually not a move that sticks. Most of the time, markets fall initially on the FOMC minutes, and then they actually rip into the close of the day. So if you do see a fall in the markets tomorrow, could actually, make for a pretty good trading opportunity to the upside. Again, I'm not a financial advisor. That's just what tends to happen with the markets. Now, if you look at factory orders month over month for May, those are coming out at 10 o'clock in the morning tomorrow. You're expecting 1.5%. Last month's reading was 0.4%. So you're expecting a sharp increase from the last reading that we got. Now, on Thursday, you're going to get continuing jobless claims for June 24th, initial jobless claims for July 1st, expecting those to be around 245,000. The big data, though, is going to be ISM services PMI. You're expecting that to come in at 50. Anything under 50 is contractionary. The lower, the better for this number, considering a lot of the inflation that we have seen is really in that services sector, as well as the jobs, right? Services have just been hot in general. This is not new information to most of you guys. Now, JOLTS job openings, that comes in at 10 o'clock in the morning on Thursday as well. Last month's reading was 10.1 million. You're expecting 9.9 million this time around. If this comes in lower than 9.9 million, that's positive. Again, Fed Jerome Powell says they need to get the labor market back in alignment. The way that they do that is either having job openings come down, which would be the JOLTS job openings number falling, or it would be for people to lose their jobs, and that's not really what you want to see, okay? The thing the markets are going to care about from this point on is not the Fed raising rates, it's a recession or not. If you start to get, recession fears, and we start to get recessionary data, markets are not going to like that whatsoever. Now, Friday, that's going to be the big data, where you get non-farm payrolls for the month of June. You're expecting 250,000 job ads, and the unemployment rate for June expected to come in at 3.7%. Last month's reading was 3.4%, so you've seen a sharp increase last time around. If that does go higher, that's going to be a problem for the markets. Best case scenario, you come in line with expectations at 3.7%, or potentially even falling. That would be encouraging, again, because the markets, they care about this recession narrative or not. Now, if we take a look at the option activity again expiring this week, and we show this as a bubble chart and blow this up, the 450 call seen a lot of activity on Monday. You do have open interest at about 28,000. The volume on Monday was 17,000. And for the $5 call, you're also getting open interest at 32,000 with volume of about 18,000 on the day. The $4 put remains the biggest strike on this expiration for this Friday, with 64,000 for open interest, and you've seen about 11,000 for volume on Monday. For July 14th, that $4 put is still the largest option. You are getting some decent option activity at the $5 and the $6 call as well as July 21st. You are seeing a lot of open interest at that $10 put. At about 261,000, as well as the $10 call at about 290,000. So for the first time in a long time, you're actually getting more call activity at the $10 put than put activity at that $10 strike. Now, another large option expiration is the $4 put with 213,000 for open interest, and the $3 put with 118,000 for open interest as well. So things are just so negative. There's so many shorts out there from the market makers that if the markets do, as I think, start to look past this negative catalyst of the courts, start to look towards, AMC raising billions and billions of dollars of capital, the stock's probably going to continue higher this week. What I would imagine is you probably get stopped out at about that 50-day moving average, sitting at about $4.90 per share. That's a solid level of resistance. If I were to say support, probably going to be at this 8-day moving average. We've kind of seen support recently at this line, and that's sitting at $4.24 per share. So I don't expect the biggest things for this week, but a positive rest of this week nonetheless. Next week's going to be the bigger week, and that's after the courts, and that's where AMC stock could really make a rip up higher, guys. So that is going to do it for this video. That is what you need to know heading into the rest of this week. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one.